Okay, this is the 16th May Nifty chart expiry day. You can see that Nifty is going down and finally around 215, 220, it made a breakout from the 20 MA and then it made a big move, unidirectional move and made almost 300 points rally and finally closed around 22,000, 22,422. So that move happened in underlying and same time, this is the options chart, 22,100 call option. When there was a massive move in the underlying, what happened in the option chart? We can see that around 215, 220, when there was a breakout in the spot chart, this is the option chart. I am playing the replay button and you can see that it was trading around 25, 26 rupees near to breakout. And you can see that within few minutes, it went up to almost 300 to 320 rupees within few minutes. So 25, 26 to 320 mean it went up to almost 10 to 12 times. That means somebody invested 10,000 rupees when breakout happened, it would have been given 1 lakh to 1 lakh 20,000 rupees. If somebody invested 1 lakh rupees, then it would have been 10 to 12 lakh rupees within few minutes. So that is the potential in this kind of setup where sometimes option can go up to 10 times, 20 times, 50 times, even 100 times within few minutes. That is called zero to hero on expiry day. And also this is like a hitting a jackpot or a lottery ticket. By investing a small amount for a lottery ticket, you can become crorepati if you are lucky, right? Same thing in options also. Sometimes you can catch this kind of move where I show you some charts where 1 rupee option went up to almost 100, 120 rupees. That means more than 100 times within few minutes. And in the lottery ticket, if you want to win lottery ticket, you need only luck, right? There is no skill. But if you want to catch this kind of move, then it is not about the luck. It is about the chart reading skills. It's about knowing the price action. It's also about the knowing which strike price you have to choose for the big moves, whether ATM, OTM or ITM. That is how sometimes you can catch this kind of move. And that is what I'm going to discuss in this video, where you'll see which kind of setup you can look for this kind of massive move in option premium. Okay, so watch this video till the end because you are going to learn many things in this video. I made a small presentation where I'll be discussing how 1 rupee option went to 100 rupees in minutes, and I'll show you that chart when it went, and how somebody invested 1 lakh rupees, he would have made 1 crore within few minutes, and how to catch such moves. That means I'm going to discuss about the setup, which setup you have to see on the chart, and which kind of days you have to see, which time you can take such trades, and more importantly, which option strike price you have to select. That will be discussed in the detail. So watch the video till the end because you are going to learn many things, especially if you are an option buyer. Okay, now you can see that first slide is disclaimer, because normally you know that when somebody makes presentation, at the end they give the disclaimer about the strategy. But in this video, in the beginning only I am giving disclaimer, and the reason for it, this strategy have a very low win rate. Okay, just like a lottery ticket, when you go and buy a lottery ticket, you already know that your win rate is very low, right? It is very rarely that you win a lottery ticket. So same thing, when you go for this strategy, you should know before that it has a low win rate. Most of the time, this strategy may not work. When you buy a lottery ticket, you know that most of the time you will not, most of the time, whatever the price you paid for that lottery ticket, it goes waste. But when it works, it can make big moves like option premium turning into 5 times, 10 times, 20 times, 50 times, even 100 times, right? I'll show you that chart. 100 times also sometimes it can go within few minutes. You will not win the lottery ticket every day, but when you win, you will hit a jackpot, right? Just by paying few rupees, you can become crorepati if you hit a lottery ticket. Same this strategy also like that, where if your analysis is right, market goes as per your direction. If you have chosen the right strike price, then you can hit the jackpot. And that is what I'm going to show you in this presentation. Now, first the criteria. Criteria is this strategy only applicable on expiry days. That means if you are trading in Nifty, then it is only applicable on Thursday. If you want to trade in Bank Nifty, then it's only applicable on Wednesday. That instrument has to have a expiry day on that day. Okay. Only applicable in the late afternoon. Remember, there is a timing also for this. This strategy not applicable in the morning when market opens, neither in mid-afternoon. It normally after 2 p.m. or 1:30, 1:45 around fine. But after 2 p.m., 2:30 p.m., this strategy can work very well. only applicable in ATM or OTM option. That means this strategy don't go for ITM. ATM is fine, OTM also fine, but OTM also slightly OTM is fine, not too far OTM. Only applicable when option premium trading at single digit. That means less than 10 rupees. Okay. Only applicable on trending day or sideways days, not applicable on zigzag day. I am sure most of you know what is trending day. If market is going in one direction, that means going up and up and up. This is known as up trending day. This is known as down trending day. If market is going down, but if market is not going any direction, it is trading in a tight range like this for the entire day, then it is known as sideways days. But sometimes you know that market will go like this and suddenly it falls, again it bounces, suddenly it falls. This is known as a zigzag day. On zigzag day, this strategy is not applicable. It can be trending day, it can be sideways day, not on zigzag day. Now let us see what is the strategy. Strategy is, if it was a trending day, then look for a reversal candle at late afternoon after 2 p.m. Closing above 20 MA on downtrending day or below 20 MA on uptrending day. That means what I mean by that. For example, if it is a big trending day on upside, how it market keeps going up, making bullish candle, bullish candle, bullish candle. When market is going like this, you know that 20 MA also follows the price, right? And price most of the time stays above the 20 MA, and most of the time it takes support and start bouncing. But after 2 p.m., if you see that instead of bouncing, it start making a full body bearish candle and breaks and closes below 20 MA. That is your end. Okay. This is only on uptrending day. Now, what about the downtrending day? Downtrending day, market is going like this, like this, like this, right? Till 1:32 o'clock, maybe market is going like this. And same time, 20 MA also following the price, and price facing resistance near the 20 MA. And finally, at around 2 o'clock, candle breaks 20 MA and closes above it. Then this is the entry. This candle is your entry. And exit one target hits like 5 times, 10 times, 20 times. I not discuss 50 times, 100 times because that happens very rarely. But sometimes some people may book at 2 times, 3 times also. That's why I mentioned as per predetermined target, you have to decide. That is totally up to you how much you want to make profit in this trade. But remember, there is no stop loss. Okay. There is no stop loss in the strategy. That means it's a zero to hero. That means suppose you bought a option at 2 rupees, then you will wait until it becomes 5 times, 10 times, 20 times, but you will not keep stop loss, because if the strategy doesn't work, finally what happens? It becomes zero, right? Your maximum loss is only 2 rupees. You will lose only 2 rupees. So no point in keeping your stop loss at 1 rupee, 1.5 and all this, right? Don't keep stop loss, because you know that your maximum loss is only 2 rupees because you are buying option, you are not selling option. So that's why in this strategy, there is no stop loss. It is either 0 or 0. Now let us look at this chart, right? This is the 16th May chart. It was a Nifty expiry day Thursday, and you can clearly see that Nifty is trending downside, right? Nifty is trending downside because it is making lower highs. It is making a lower highs, lower highs, lower highs. And suddenly this candle closed above the 20 MA, came down, and one more huge candle closed above 20 MA. What I said in the presentation, what is the criteria? Only applicable in late afternoon, right? Not at the mid afternoon and all this. So that's why if you see that mid afternoon, suddenly it breaks 20 MA and closes above it, then avoid it, because most of the time it's a trap. So there is no entry here, no entry here. Then around 2:15, 2:20, you can see that candle finally broke on the 20 MA, closed above it. Now this is the entry. This is the entry. You will take the long trade for 0 to hero, and you expect price to go like this. If it goes like this, you can make a very good profit, but sometime it may not work. If it goes down or it goes and stays sideways, then that option becomes 0. So for that, you should ready for it. So that is the setup. Let's go to the option and you let us see. You can see that it was trading around 25, 26 rupees and went up to 320 and finally closed at 304. How many times? It is around 10 times or 12 times, right? If you entered when candle closing above 20 MA and you entered option, you bought a call option, 22,100 call option, you must have made your profit by 10 or 12 times, right? That means 10,000 rupees would have become 1 lakh or 1,20,000 if you held on to your trade till 3:30 p.m. Right? Now let us say another example. This is the uptrending day. This is the 30th April. This is the Fin Nifty. Fin Nifty expires on Tuesday. So this is the Tuesday, 30th April. It was a strong trending day. How to know trending day? It makes a higher lows, higher lows, higher lows, or you can just follow the 20 MA. Whenever it is trending upside, sloping upside, that means it's a strong uptrending day, right? And most of the time, price have tendency to take support near the 20 MA. You can see that price was trending on the upside and somewhere around 12:30 it started closing below the 20 MA. Earlier it was taking support, but around 12:30 it started closing below it. What I said again, not applicable in mid afternoon, only applicable in late afternoon. So you should not have taken the short trade. Then again, price bounced, started going up, and around 2:30 candle closed below 20 MA. This is your entry, right? This is the entry you will go for zero or hero trades. Now, what is the at the money option? Around 22,000 Fin Nifty was trading. So let us go to option chart and let us see what was the option price was trading around that time. You can see that around that time 2:30 option was trading around 15-16 rupees and it went up to 158, right? It made a high of 158. How many times? 10 times. You made a profit on 10 times by buying a put option. I'm taking average, okay? I don't know exactly what was the price here. I'm taking around 15 rupees, right? Either that 15 rupees would have become zero or it would have become hero. On this day, it became hero. Remember, this is not something like every expiry at 2 p.m. you will take the call option and put option and you think that it will become 10 times, 20 times. It doesn't happen, okay? For that, you need to understand the criteria which I discussed. So even after applying this criteria, everything, it's not that every time it works. That's why in the disclaimer, I said it's a win rate is very low, but whenever it works, it can give big profits. In the thumbnail, you've seen that I have mentioned 1 rupee option can become 50 times, 100 times, but I've shown you the chart where it went only 10 times, 12 times, right? Then when it can become 1 rupee can become 50 times, 50 rupees, or 1 rupee can become 100 times, that means 100 rupees. So that depends on which options you choose. So if you do the Google or go to other YouTubes, you see that most of the time they say that go for at the money option. It's very sensitive to gamma. Gamma is an option Greek. So I'm not going to discuss here now because I know that many people will get confused. It's a technical thing. So I'll try to make it very simple so that beginners can also understand. Okay. So this move comes because of the option delta called gamma blast. So if you go to other Google and YouTube, they say that go for at the money. Yes, at the money is better. But OTM also sometimes can give big news. So that's what I said, which depends on which option you choose. Okay. Here, if you go for OTM option, then winning probability lesser than ATM option. But it can give 50 times, 100 times if there is a massive move in underlying. Okay. So that means if it a massive move comes in underlying, then it can go 50 times, 100 times. I'm going to show you that chart in coming slides. Okay. If you go for ATM option, then winning probability is higher than OTM option, but can give only 5 times, 10 times, 20 times. Okay, you have seen the earlier chart which you have seen that 10 times, 12 times you got it by going for ATM option. But same time, if you go for OTM, then it can give you 50 times, 100 times, but winning probability is very less. So that you have to understand whether you want 50 times, 100 times, or you want higher winning probability. Okay, so what I'm going to show you now in the next slide, I'm going to show you when there is a same move came in underlying and how which option gave you bigger profit, that we'll see it next. Okay. And another thing is slightly OTM is fine, but never go too far OTM because winning probability is very low. Right. That's what I already discussed, that OTM 1 strike, 2 strike, or maximum 3 strike fine. But going too far OTM, 5 strike away, 7 strike away, 10 strike away, it is almost like zero winning probability. Okay. Now, same example we'll take it 16th May. You can see that it was breakout happened around 22,120 and already we have seen the chart of ATM 22,100. Already I have shown you this chart where it was trading around 25, 26 rupees. It went up to 320. That means 10 to 12 times, right? Next, I'll show you 22,200 call option. Okay. So that means slightly out of the money option. It was trading around 7-8 rupees. It was trading around 7-8 rupees, went up to 220. Okay. So that means how much? Almost 30 times, right? 28 to 30 times it went. because you went slightly out of the money. Okay. Remember, I exactly don't know what is the price here because you can that time scale here 0 here 20. That means it is, if it was exactly at half, I could have said it is 10 rupees, but it is lesser than half. So that means it is less than 10 rupees. That may be 6-7 rupees. Okay. So that you have to go and check in the option chart because I have not seen exactly what is the option that was trading. This is 22,250. Earlier we have seen 22,200. Now we are going still further out of the money option. Now you can see that it may be trading around 2 rupees, 3 rupees, right? Maybe we'll take it as a 3 rupees. 3 rupees option went almost how much? 160, 170. That means almost 50 times, right? 50, 55 times. So that means 10,000 rupees investment would have become 5 lakh rupees within few minutes because of this big move. And finally, we'll take one more strike away. This is 22,300. This is still further out of the money option. And you can see that this was, maybe it was trading around 1 rupee here. Just look at this. It's almost coming near to zero. That means it must have been just 1 rupee trading and it went up to how much? 120. So 1 rupee to 120 rupees within few minutes. Now you have seen how this known as 0 to hero. That means 1 rupee would have become 120 if you held on to your trade. If you held on to your trade till price came down. That means 10,000 rupees would have become how much? 1,20,000 rupees. Or somebody who's a risk taking trader who invested 1 lakh rupees, it would have become 1.2. Right? So that is what 1 rupee went to 120. But remember, many people may feel it's very lucrative. They think that I'll borrow 1 lakh rupees and if price goes like this, then I become crorepati. Please don't do it because you should know that winning probability is very, very less. Every day this kind of move doesn't come. Okay. When you are investing in this trade, suppose you are going to invest 10,000 rupees thinking that today that big move come in the late afternoon. You should know that this 10,000 rupees you are giving as a charity. You are giving as a charity to the market. That means 10,000 rupees becoming zero is very high rather than becoming 10 times, 20 times, even 50, 100 times. Becoming zero is very high. That means think like you are doing a charity to the market. Think like you are giving a donation to the stock market because that 10,000 rupees can very high chances that it can become zero. And another thing is that you have to have that strong psychology that when price is going like this, you should hold on to your trade. Ask yourself how many times you hold on to your trade when price goes up to 50 times, 100 times, very less because price doesn't go like a rocket like this, right? You can see that from here, price started going up, but it went up and came down. Next candle went up till here, came down. This candle in the live market, it came till here. That means it was making a red candle. Will you hold on to your trade when it is making a red candle and finally it made a bullish candle? But you would have booked your profit here only, right? You would have got panic, you would have got scared that your profit will go away. Let me book whatever the profit. So that means one has to have a strong control on psychology that I will only hold on to the trade when it becomes 50 times, 100 times. Only they can catch this kind of move. And finally, you can see that it went almost 120 rupees from 1 rupees and finally closed at 104. Still more than 100 times, right? So that is what this is known as 0 to hero. Okay. Now, last we'll see one more strike. Earlier, we have seen 22,300. If somebody gone for 22,450 call option, look at this. It was trading around, say, almost 1 rupee only, but it went up to 8 rupees, 9 rupees, and then finally 330, it becomes zero. Right? Almost zero. 1 rupee, and you lost that 1 rupee also. Only how much it became? Maximum 8 times, right? By 330, it became zero. So what is the difference in this option strike and earlier? You have seen that this became zero, but all these other strikes closed that very high. So for that, see where Nifty closed that day. Nifty closed near 22,400. You can see that Nifty did not go and touch 22,450. Neither it closed above that. It closed below that. So that means that option stayed out of the money. So that's why you did not make money if you went for this option. But all this 22,100, 22,200, 22,350, all option would have given you good profit because it became ITM. Okay. So that means you need to have just basic knowledge on what is ATM, ITM, OTM before going for this strategy. Okay. Next is, I said, Also applicable on sideways day. If it was sideways day, then look for late afternoon breakouts like breaking PDH, PDL, CPR or consolidation range. That means market goes up and then it stays sideways for a very long time, making a strong consolidation around this range. Okay, that is the one setup. When it breaks either side of consolidation, upside or downside, that is the entry. Or sometimes you see that price is coming near the CPR and CPR is say average or narrow and it is trading inside the CPR and finally it breaks and closes below it, then you can see big moves sometimes. So that is where this setup is applicable. This is the January 9th and again Fin Nifty chart because it was a Tuesday expiry day and you can see that Fin Nifty opened gap up, took support near the 20 MA and then started making a huge consolidation, right? Neither it was going up or going down, it was trading in a strong range. So now what we'll do, when it is trading like this in a strong range, we'll wait till 130, 145, then wait for a breakout to happen on either side, right? Either breakout on the upside or downside. So before marking the level, we have to know what is the strong support. So this is the strong support, you can see that, right? This is the strong support on the downside and this is the strong resistance on the upside. So you'll wait for a breakout on the upside or downside and this candle made a breakout, right? This candle made a breakout. Then you go and buy a put option going for a 0 to here. And which strike you can choose? At the money better, but it will not give you 50 times, 100 times. If you want 50 times, 100 times, then you should go for 21,350 or 21,300. But you know that more out of the money you go, your winning probability becomes lesser and lesser. Now, let us see what happened if you went for ATM option and when you went for OTM option, at which is 21,350. Okay, so this is the ATM option, that is 21,400. You can see that it was trading around say maybe around 10 rupees when breakout happened and after that it went almost till 250 and finally closed at 200. So that means how many times? 25 times, right? So at the money here it gave you 25 times, but same time if you went for OTM, which is 21,350 put option, maybe it was trading say around 2-3 rupees because it was almost near to zero, right? 2-3 rupees and it went up to 200 and finally closed at 150. So from 2 rupees till 200. So how many times? We got almost 100 times. Okay, whatever it is, if you take it 3 rupees also, it how much? 3 rupees into it went up to 210. That means 70 times, right? If it was trading at 2 rupees, then it was 100 times. If it was trading at 3 rupees, it went by 70 times. Still big move, right? Why you got that move? Because there was a big move like this in the underlying. Okay, now let us see what is the reason behind this move. What is the psychological reason behind this move? And the reason is if any expiry days has linear premium decay, then many option seller have tendency to sell every ATM, OTM, call or put, expecting it to become zero. Okay, so that is what many traders, they come to the option selling without knowing anything about the option, without knowing about the delta moves, without knowing about the option Greeks. They just try to enter and they think that option selling is a free money. That means just sell OTM option and it is going to become zero. But remember, it is not that every time OTM option becomes zero. Sometimes if big move comes, even 1 rupee options also you have seen that it can go up to 100 times. If an option buyer can make profit like 100 times, then remember, what about the option seller? If option seller sold 1 rupee option and if he has not kept the stop loss, just imagine what would be his loss. Okay, so that's why option selling is not easy. So don't just become option seller selling all 1 rupee, 2 rupees option. That is what I said. Option seller have tendency to sell every ATM, OTM. That means, for example, if option Nifty at the money option opened at 50 rupees, then it becomes 40 rupees. They will first sell 50 rupees. Then when it becomes 40, again they sell 40. When it becomes 30, then they will again sell 30. Then again it becomes 20, they will sell again 20. Then again it becomes 10, they will again sell it. This is called linear decay. Linear decay means from the morning opening time, 50 rupees came to 10 rupees, right? And when it comes to 5 rupees, they think that this 5 rupees also finally becomes zero and they will sell it. And when this 5 rupees suddenly it becomes 10 rupees, when it becomes 20 rupees, when it becomes 30 rupees, what happens? All these sellers who sold option at 30, 40, 50, 20 and all this, they come into the panic, right? Suddenly from the profit, they're into the loss because suddenly it started going up. What they do? They get into the panic and they will be in hurry to cover their position. That means first they sold option, now they have to cover their position, means they have to buy the option, and that gives the violent move on the upside. And what happens? People who kept the stop loss, that stop loss also get hit and price keep going up. That is how it happens, and especially it happens, as I said earlier, late afternoon, this kind of move can come. So that is what the psychological reason behind this setup. Again, finally, again, I'm putting the disclaimer because many people may do the mistake of every time buying zero to hero. But remember this disclaimer before going for this strategy. Okay, so that's about this video. I hope you learned something new in this video about zero to hero trades and also about the how to select right strike in options. If you want to learn more about day trading strategies, swing trading strategy, option strategies, then you can go below this video in the description section, and I have given all the links about my courses. If you are interested, you can buy it. Okay, so that's it, guys. I'll see you soon with a new video. Until then, bye and take care.